In today's video, I'll be revealing the retirement budgeting formula that most financial advisors don't teach, which completely transforms how you approach spending in your golden years. Through analyzing thousands of retirement budgets and working with retirees who've successfully managed their money for decades, I've discovered a systematic approach that eliminates financial stress and maximizes your retirement satisfaction. That's exactly why I'm making this video today, to show you the 3 category spending framework that replaces guesswork with strategy, how to account for expenses that blindside most retirees, and I'm also going to give you the monitoring system that keeps your retirement budget on track. Let's get right into it. Let's break your retirement expenses into 3 essential categories: essential, discretionary, and one-time expenses. This framework removes the ambiguity and gives you control. First, let's talk about essential expenses. I call these your needs. These are your non-negotiables, the foundation of your budget. These expenses include household costs, transportation costs, living expenses, and of course, family care and your medical and healthcare costs as well. Here we're talking about mortgages, your rent, its utilities, groceries, insurance, and those healthcare premiums. These are the bills that don't disappear no matter what happens, even during tough times. Knowing your true essential costs, it gives you the baseline of what you must cover each and every month, no matter what. This is what we call your financial floor, and like I said, I refer to it as your needs. Next are your discretionary expenses. These are the wants that you have. These are the things that bring you joy and flexibility in retirement, such as travel, hobbies, dining out, entertainment that you have. Maybe it's charitable donations and gifts that you're doing. This is where you get control of your finances. With these wants, you can scale back this category if you have to, but you shouldn't feel guilty for spending money on these things. With clear boundaries, this spending becomes intentional and enjoyable for you in retirement. Finally, and lastly, are the one-time expenses. These are the retirement budget busters that most people forget to plan for. Things like a kid's wedding, helping with grandkids' tuition, or an unexpected home or auto repair. To stay protected, you want to allocate a yearly amount, maybe 5 to 10% of your overall retirement budget. This is a cushion for these one-time events and one-time costs. Now, before I move on, this budgeting framework could save you from retirement financial stress. Just click the link in the description to fill out my questionnaire, and I'll send you a personalized video analyzing your specific situation and showing you how to optimize your retirement spending plan. Once you've organized your spending, solid strategy to calculate what each category will actually cost: your needs, your wants, and one-time expenses. So don't underestimate and stress later. You should start with your essential expenses. These are the needs. Look at your current costs for your housing, food, insurance, healthcare, and ask, what will change when I retire with these costs? Here are some important questions that you should ask yourself when you're looking at your needs. How many years left on your mortgage? Do you plan to move or downsize your primary house in retirement? This housing cost is a big one for a lot of people. If you downsize, this might reduce expenses, or it might increase them if you're moving to a higher cost of living area. And what about your healthcare cost? This is often the biggest retirement wildcard that most people are going to have. You'll want to factor in the rising premiums and out-of-pocket costs for your medical insurance. So you should be thinking about, how will your retirement health insurance premiums change before you're retired and after you retire in the future as well? Have you factored the increased out-of-pocket medical expenses with that need that you're going to have? You should also consider long-term care costs here. Even if you don't need it now, it's important to include the possibility in your long-term plan of having a large increase in cost due to long-term care stays, because these costs can be massive if you're unprepared. And please don't forget about inflation. I promise you prices will go up in the future, especially for your healthcare needs. A conservative estimate that I like to use is about 3% annually. Is essential if you're going to have an early retirement, because you also tend to spend more on travel and leisure and hobbies early in retirement. So your discretionary expenses might spike in those first 5 to 10 years if you're an early retiree. So you should plan accordingly. Understanding expense calculations is critical, but managing your taxes and implement ongoing budgeting monitoring system, this creates the complete retirement spending strategy that you're going to need. Taxes don't retire just because you do. In fact, many retirees are surprised by how much taxes reduce their available income in retirement. You'll want to account for federal, state, and of course, local taxes in your spending plan. The types of accounts that you can withdraw from in retirement, such as Roth IRAs, traditional IRAs, and 401ks, where you pull from here can make a big difference in your tax liability. That's why a tax-efficient withdrawal plan is just as important as your investment strategy, if not more. So now let's talk about monitoring. Retirement isn't just a set it and forget it phase. Spending will change over time, especially as we go from your go-go years to the slow-go years to the no-go years. During those phases of retirement, on average, you're going to see lower overall spending as you age. And you might need to adjust your retirement income plan to reflect these changes, allowing you to spend more money early in retirement and less money later in retirement. This could mean reviewing your budget annually or after any big life event that you have. I also want to encourage you to look for red flags that are going to pop up during the year, such as rising healthcare costs, maybe you're overspending on travel, or if you're having repeated one-time expenses that start becoming routine, you're going to want to address those things early and often. The goal here is to stay flexible, protecting essential expenses while adjusting your discretionary spending or even modifying your withdrawal strategy when needed. And I always encourage clients to have multiple what if scenarios in place. That way, if a market dips or expenses spike, you've already got a plan in place to account for those things. Now that you've seen this complete budgeting framework, let's look at how you can implement it to create spending confidence throughout your entire retirement. So how do you make all of this real for your specific situation? Well, you should start by listing every retirement expense and categorizing it as essential, your needs, discretionary, your wants, and the one-time expenses. Once you've done that, you should assign monthly and annual amounts to each using real data, real numbers. Don't guess here. Find the actual numbers. Look at your statements, such as your credit card statement, your bank account statement, or a debit card statement that you're using as well. What I want you to do is take around 60% of your retirement income need. Doing this on average, what I've found is that covers the essential expenses, the needs that you're going to have. Next, the 30%, that can go towards the discretionary spending that you're going to have, your wants. So 60% to your needs, 30% to your wants, and then the 10, this should be reserved for one-time expenses or unexpected costs that pop up during the year. Building in buffer accounts is essential so that you're not caught off guard. But don't be overly conservative to the point where you stop enjoying life because you're holding on so tightly to your money. We encourage clients to use tools like budgeting software or spreadsheets to track their spending and comparing it to the projections that they're going to have. You should also coordinate your spending plan with your investment withdrawal strategy. You don't want to pull too much out too soon or too little too late and you're feeling constrained early in retirement. You should have a documentation system, whether it's digital or physical, that shows your spending, your income sources, and your adjustments over time. What we like to do in our Red Zone retirement planning process is to get fixed income to cover your fixed expenses. So what we do is we have your needs covered by fixed income sources like pensions, Social Security, maybe it's annuity income, rental income, or a dividend strategy. Fixed income covers your needs. And then what we do is we get your wants covered by variable income sources, such as withdrawals and distributions from retirement plans that are invested in the market. And if the market dips, that's where we dip into the 12 to 18 months worth of cash reserves that you should have on hand, like we coach in our Red Zone retirement planning process. Doing this gives our retirees more confidence in their retirement spending plan because they know that their needs are taken care of no matter what happens inside of the market. I want you to remember here that inside of our planning process, flexibility is a superpower that we give you. In down markets, you might feel like you need to tighten up. In good years, you might allow for a few more luxuries than you're used to. But what we do is to make sure that you're never compromised on your essential expenses. And how we do that is we give our clients a steady paycheck in retirement, just like when they were working. So every 2 weeks, no matter what's going on with the markets, you're getting guaranteed paychecks inside of your bank account to cover those fixed income needs that you're going to have. Now that you understand the 3-category retirement spending framework and how to implement accurate expense planning, you can create a budget that provides both financial security and retirement enjoyment. If you want help creating your personalized retirement spending blueprint, just click the link in the description below to fill out my questionnaire. I'll send you a personalized video analyzing your exact situation, and I'll show you how you can optimize your retirement budget. I'll see you on the next video.